Usually the beginning is usually where I screw up the most. So might do this
Oh,
twice. Might do
no
this twice.
worries.
All right. Welcome everybody. I've got Sunny here, co-founder of Osmosis. First time he's appearing on the channel, and I normally do a long introduction. I'm not going to do that. We're going to get right into the fun stuff. Do some yes or no questions, some questions about Osmo, questions about the platform and the ecosystem. I've also got a tweet by Sunny, probably not the one that he thinks it is, that we could talk about a little bit because I thought it was pretty interesting. Sunny man, thanks so much for joining.
Thanks for having me on. I know we've been trying to get this set up for probably close to 9 months at this point,
It was
and
a while.
yeah,
It
so
was a
happy we
while.
finally got it. We're here now.
All right. So most people that if they watch my channel or they follow me on Twitter, they know that I basically rebalance my entire portfolio at near the bottom of the bear market. So I get a lot of crap for selling the bottom. I'm like, oh, you're an idiot. You sold the bottom. You sold all your Osmo, whatever. I soured on DEX tokens. I repositioned, but I know that a lot of things change with the Osmo token. I don't know that much about Osmo 2.0. So we'll definitely talk about that a little bit in the beginning. After a while, it's tiresome to hear about all these tokenomics redesigns. So I usually don't get into the details, but let's start with yes or no questions. This is the hardest part of the interview for both of us usually, but let's see if we can do it.
All right. Okay, I'm gonna try to stick to just a yes or no.
I appreciate. I know you can do it. And by the way, for people that are just hearing about Osmosis for the first time, it's a DEX that's in Cosmos, but it's not an app on the Cosmos hub. It's its own blockchain. The DEX is the premier product, let's say. So that's the context that you need to follow this interview along. Number one question. This is for my haters out there anyway. Can users short the Osmo token on your platform?
Yes.
You can. Okay. But not where I live, I guess. All right. Number two, is Osmosis still an app chain?
Yes.
Okay, okay. Number three, and this is based on something I heard you say at one of the crypto events a couple weeks ago. Is being the Robin Hood of crypto a realistic goal?
Yes.
All right. And have you on Twitter blocked anyone from either the Kajira or Neutron teams?
No.
No. Okay. All right. Actually, let me add a fifth question because I know that either you host poker games or you sometimes play in poker games with some crypto people. Would you consider yourself a fish in poker?
Yes.
Oh, you would. Okay. All right. All right. All right. Good. That's the first time anyone's ever gone through 5 questions, yes or no. Carter was like really close twice. Almost no one can do it. But we'll deep dive now. Now we'll get into the conversation. Osmosis to me, for better or for worse, is the key to the whole Cosmos ecosystem, the way it's been designed. First DEX, pretty much the first real app that a lot of people can use in Cosmos. Now we've got 75 chains, and there probably aren't that many people on these other chains compared to Osmosis. It's the main place where people would trade, I would imagine, right? But I want to go back to one of your quotes about being the Robin Hood of crypto. I think that's an interesting quote, right? It's a good goal. You said it's realistic. What would need to happen to be able to say yes, we're as close as we can get to being the Robin Hood of crypto? How do you envision that?
Okay, so what does that involve, right? I think one is really nailing the UX. I think Robinhood, part of what, there's a lot of things that made it successful, right? It was like one of the first zero trading fee place where people trade stock and stuff. But I think a big part of it was just how good the UX and UI was, right? Like, I just remember when the first time I used it and you did that little swipe up and it like this little ding when you like bought your first stock. It was like it felt like a very delightful experience. And I think that there's a lot we can learn from there of how do we build like such delightful experiences for users. So a big focus.
Osmosis compared to other dexes, to be fair, from launch has been pretty user friendly. To me, I always consider Uniswap version 2 to
Mhm.
be just great for a new user. The
Yeah.
clicking not so great, but the website itself, right?
Yeah. So there's that. Yeah. So a lot. I think we that was a big focus of ours from the beginning, and I think there's still a long way to go on making that more user friendly. One of the big things we're focused on right now is smart accounts or account abstraction, which is this like, you know, how do you onboard onto this? Is like, we have this goal that not, majority of users probably should not be using wallets, like having to download a browser extension wallet. Browser extension wallets very good for security purposes, but like uh not great from the UX perspective, right? And if most people are trading like smaller amounts, right, to onboard, they should probably start with something that's like simpler. And so we're working on a lot of functionality that should make it so you can just hop in and sign up. Make the sign up flow feel much more akin to a Web 2 app than a most crypto apps
So like
that you start
email or simple username, password, something like
username.
that.
Yeah, username. It'll be like a username. There's this new standard called passkeys that you may have started to see around, but what that basically means is it'll use your, like, let's say you have a MacBook, it'll use your touch ID, or if you have a phone, it'll use like face ID or something like that to log
Okay,
in.
got it. All right. So in other words, and I've heard this from a lot of gaming projects, they want to make it so that people don't necessarily need to know anything about blockchain, maybe
Yeah.
not even know much about crypto to be able to use whatever application is being built. It makes sense. What else do you think needs to get abstracted away to have that
Mhm,
feel
mhm,
like a Robinhood or, you know, some of the simpler Web 2 apps, whether it be
mhm,
eBay or like Walmart.com, something like that. People
mhm.
should just open it. It's intuitive. What else needs to get abstracted away?
Yeah. One of the things that we knew had to and has already been done is fees, right? Like I think one of the big problems was like almost every chain today you have to pay fees in a specific token, right? On Ethereum you have to
Mm,
pay in ETH, and you know uh with Osmosis we realized that's a little bit silly, so we actually built a system that allows you to pay your fees on Osmosis in any token. You want to pay in Osmo, you want to pay in USDC, you want to pay in Atom, you want to pay in Tether, Bitcoin, whatever you pick it, you can pay your fees in that. So that was a big one. Um, Another one that I think is very important that we need to tackle and solve is like on ramping. I think almost every DEX you go to today, or almost every DApp, has like a buy tokens button, right? You go on Uniswap, it has a buy tokens button, but it opens up this like MoonPay modal that just like feels
mm,
very
mm, mm.
abstracted away from the rest of the UX. And admittedly, Osmosis does this today as well. You click buy tokens, we give you the options of Transact or Cato and stuff. But we want you go on Coinbase, like you have like the buy, sell, swap, right? And buy and sell are just this like it's about buying crypto with fiat, but like it's like very ingrained into the experience, right? And I think that's something that needs to be abstracted away. This like making how do we make like the experience of like going from fiat to crypto and out, like have a similar UX flows to just swapping between different cryptos?
For a user,
Mhm,
let's say I was using Osmosis and then all of a sudden everything crashed. I haven't logged back in until today.
mhm,
There has the platform has evolved, right?
mhm,
There's been a lot of changes. The two most obvious changes from the user perspective would be the supercharged pools
mhm,
and new stablecoin liquidity. No
mhm,
more UST. We got native
nope,
USDC. We got bridged USDC. To me, those would be the two biggest changes. In your mind, what's like the third one that maybe the end user doesn't see, but you
mm,
think is critical to the platform kind of changing over time?
mhm. Um, I think maybe the third biggest change, uh, kind of a little bit related to like one of the yes or no questions you asked at the beginning, is that you'll see a larger set of apps and functionality in Osmosis,
Right.
right? So you
Yes.
have, you asked about, can you short Osmo? If you asked, a year ago, the answer would have been no, right? But now actually there are multiple like ways for you to short. You can short on margin using Mars, or you can short in perps using Levana, or you can take like an even more like exotic short position on power perps using margin. So there's a lot more uh, features and apps that are built into the Osmosis flow.
Right. And the reason why I asked that question is because most people would consider an app chain, it's a blockchain with one app on it.
Mhm.
If you have these ancillary apps that are driving volume to the main app, I think that's still an app chain, right? You're complementing it. It's not like you have three dexes on the
Yeah.
same chain. So you've got I used Calc Finance on Osmosis. I can't use Levana or Mars. That's okay. I live in New York. You're not allowed to do anything in New York to make money. So what else is there? What am I missing?
Yeah. So
Is it mainly those three, or am I missing stuff?
yeah, so you mentioned Mars, you mentioned Levana. Well, what's great is you can go on the Osmosis site actually, and there's a little app store there that you can see
Perfect.
to see all the apps. But some of the ones maybe worth highlighting. The other perps protocol I mentioned was Margined. So Margined is a very unique type of perps protocol where it's called a power perp. Where what it does is if you're basically long, if you're longing, you're getting exposure to the square of the price of the asset. So normally when you take a leverage, you take a 2x leverage, right? Or something like that, right? So, Osmo goes up, 1x, 100%, your perp position goes up 200%. But what's interesting about power perps is if Osmo goes up, 200%, your perp position goes up 400%. If it goes Osmo goes up 300%, your perp position goes up 900%. It follows this like square law, which is really powerful. Obviously, you have to pay a high fee for this. It's similar to options where you have asymmetric. Power perps. You can consider it. It's like a very a crypto native version of options trading that you would normally see on TradFi. For some reason, options haven't really gotten as much product market fit in crypto as they have in TradFi,
That's
but
true.
if you look on Robinhood, options trading is actually very popular, and so power perps are sort of a attempt to bring options like a modify a little bit how the design of options to make it work for crypto native.
Got it.
Some
And
other apps that we good.
I'll link that app store down below. Some people may have missed it. I mean, the website's so clean, you know.
Mhm.
Um, yeah, I'll definitely link it below. But yeah, you can continue. Sorry about that.
Okay, no worries. I mean, some other apps just like worth highlighting. Stream Swap is like a launch pad. A couple tokens launched right there. Membrane is a native stable coin for in the Osmosis ecosystem. Quasar does a bunch of vaults. So you mentioned liquidity has shifted away from these like classical pools XYK into concentrated liquidity, and that is harder for the average person to
Yeah.
LP into. And so because of that, these vault products come along. So Quasar has a vault product. Astroport will be launching their vault product on Osmosis within the next 2 weeks. And so these sort of give it a way of like you just someone who doesn't want to sit there and actively manage their positions, they can just deposit into these things, and these protocols will manage positions on their behalf.
Right, and those are the supercharged
Mhm.
pools that people see now. So they're the
Yeah.
model's similar to Uniswap version 3, which when I first saw that, I said, "Wow, this makes perfect sense," but I can't pay these ETH gas fees every time I wanna adjust my position. In
Mhm.
Cosmos, the gas fees are almost nothing, right? Like, what's the average gas fee on Osmosis? A penny or less, something like that? Like,
Yeah.
you could, if you had the time, you could manage your position, but there are supplemental apps on Osmosis that do it that are meant to do it for you. So again, yeah, app chain thesis, I think it doesn't need to be one app. It could be one feature app, whether it's Stargaze, Osmosis, and then other
Mhm.
apps that are, let's say, allowed on the chain via governance to either drive volume or leverage that core application because it started off with just one app, right? And now it's
Exactly. It has to be a coalition of apps that are very value additive to each other, right? They're either bringing volume to Osmosis, or they're bringing a new set of like users that will eventually bring volume to
right,
Osmosis.
right. And I think it makes sense to be permissioned for that particular reason. So in Cosmos, you basically have the app chains like Osmosis. They're permissioned. Stargaze also, although they flirted with the idea of going permissionless. And then on the other side, you have permissionless, all-purpose smart contract platforms. Anyone can deploy anything at any time. There's no
Mhm.
voting. But I think for Osmosis's purpose, I think it makes perfect sense to be permissioned. Um, I think that's perfectly fine. You don't want people launching Ponzi after Ponzi on every single chain. We
Mhm.
have Juno for that, and Terra, right? So we don't need it on every chain. Plus, you want the other apps to, like you said, basically assist in the adoption of the main app. So it makes perfect sense. Makes perfect
Mhm.
sense. A couple questions about tokens. Two types of tokens really that I see on Osmosis. There's the Osmo token, which is very unique. You could look at it as a DEX token. It's really a lot more than that compared to other DEXs because Osmosis is its own chain. So the Osmo token, it's the staking token, right? Use it to vote in governance, provide liquidity, pay gas, MEV, pay devs, also transact across other chains. Did I miss anything? What else does the Osmo token get used for?
Can you repeat the ones you just said again?
Yeah. So staking, voting, providing liquidity, paying gas,
Mm,
MEV, paying devs, transact across
mm,
multiple chains. Is that,
yeah.
that's about it, right? It's a lot.
Yeah. I mean, obviously, like there's what happens when you stake it, right? You earn some of the revenues from the
Yeah.
chain. That I guess that's there's there's different sources of protocol revenue at this point. But you do have to do something active to do that. You have to stake the tokens in order to, and like be an active community member to like participant in the network to do that by staking. Um, but otherwise, no, I think that
That's
that
it.
covers it. Yeah.
And then we've got the LP tokens, which are
Mhm,
basically, I call them like placeholder tokens. You supply
mhm,
liquidity, Osmo, Atom, you get another token representing your position.
mhm,
Uh, I guess what's stopping me from being able to use those LP tokens for other functions across the interchain? I know that you could
mhm,
use certain ones to vote and
mhm,
stake. That to me was a huge advancement in
mhm.
LP tokens. But in my mind, the LPers are taking on a lot of risk.
Yeah.
They're also making the platform work versus passive stakers. You're securing the network. Great. You're voting for policies that affect the LPers directly, and they're
Mhm,
choosing between voting and LPing. So I guess what needs to change to be able to use those LP tokens for other things? Maybe buy an NFT on Stargaze, or
mhm.
maybe take them and borrow against them, or use them as liquidity on another DEX somewhere else. Is there a
Yeah.
reason why we can't do that?
So, you actually can do this already. So fun story. Part of what actually got me into DeFi, before getting into DeFi, I was like working on like Cosmos SDK and stuff, but very much just focused at like, the L1 protocol level, building like the core stack, not really that interested in the applications on top. Um, but then what got me excited was the sushi swap
Mhm,
vampire attack on Uniswap. And for anyone, I can just give a quick summary. So how that
mhm,
worked was Uniswap, similar to most chains at the time, pools at the time. V2. When you deposit liquidity, you get these LP shares, these tokens, fungible tokens. But no one was really doing that much with them. They were just like sitting there, and it's like, okay, cool. Sushi Swap came along and said, and they came up with this way of how do we like steal market share from Uniswap. And what they did was they made a contract that basically said, hey, take your Uniswap LP shares and deposit it into our smart contract, into our vampire contract, and then you'll start earning sushi rewards. And then what's going to happen is at exactly 2 weeks from now, where this contract, which now owns all these LP shares, they're gonna pull all that liquidity out of Uniswap and deploy it into SushiSwap and then give you the LP shares for
Uh,
SushiSwap. And they ended up stealing, I think, like close to 70% of Uniswap's liquidity that using this technique. And you know, I just saw that and I was like, whoa, that was so cool. That was like
yeah.
the first time anyone really made use of those LP tokens for other than something other than just an accounting tool, right? They actually like
Right.
you
Right. Right.
did
Right.
something with them. Um, and that just blew my mind because I was like, whoa, we just like tokenized the concept of liquidity, and that's like so cool. And so that's what got me into DeFi, excited about DeFi, and really started like going down the rabbit hole. So anyway, so tokenized LP shares, very interesting. So going back to like how can you use it on Osmosis? So one of the first things we did was, like you mentioned, superfluid staking. Was we said, hey, these LP shares, why can't we allow these to be useful in proof of stake? So that's one of the things we did. We actually
Yeah. I
can
think
use
I
them.
think it was great. It sends the right message, right? It
Yeah.
says, look, all these proposals go on chain. A lot of them directly impact the LPers, but
Hmm.
they're deciding to LP, which means they can't vote. And I probably every DEX up until then, at least that I know of,
Hmm.
they you had a choice to make. And now with superfluid staking, a portion of that LP was a 25% or something like that of the value
Hmm.
of an Osmo pair. One by one, they were kind of greenlit to be able to
Hmm.
stake, something like
Yeah.
that. Right? Yeah.
Another use case of what Mars has a leveraged LPing system. So in Mars, they've actually whitelisted certain LP shares to be able to be used as collateral
Yeah, I like that.
in the Mars
It
pool.
makes
So you
sense.
can,
If we're all
yeah.
going to sit here and agree that these tokens have value, well, technically the LP token is somewhat diversified because it's two different
Hmm.
tokens. I
Yep.
should be able to borrow against that, especially in a protocol that's building on your chain, right?
Yeah.
Maybe not every single LP token should be taken at face value. There are
Hmm.
lots of super low liquidity, unproven tokens that are paired. That's not what I'm talking about, but Atom and a stablecoin, Osmo
Hmm.
and Atom, something like that should get some preferential treatment across the ecosystem. It can encourage more people to LP. Maybe it lessens the amount of inflationary rewards that different dexes would need to use. And if I was selling NFTs on Stargaze, maybe I would want to take from pool number one, Osmo Atom tokens as payment because I know so many people have them, right?
Yeah.
There's a lot of money in certain pools out there. People probably don't even realize that there's a token in their wallet of that.
Yep. One of the challenges with concentrated liquidity is while it's very good for the DEX, it way more capital efficient. You lose that tokenization, fungible tokenizations, and rather the positions are NFTs, so they're not
Right.
fungible with each other, which makes it harder to do this kind of stuff. But I think where we're going to see a comeback of it is a lot of those vaults that we talked about, right? Like you can give it to Quasar. They can actually tokenize those vaults very easily. And so I think that those vault shares, like the Quasar vaults or the Astroport vaults, will be the new LP share liquidity tokens, and people
And
might
they're
start to
they're
incorporate those.
NFTs because they're each position is sets a unique range at a
Yes.
specific at their own price ratio, right? That's what makes them NFTs. Okay,
Yeah.
that definitely makes sense. But I could definitely see there being a market for people to speculate on that. Maybe not on osmosis, but let the NFT people figure out a way to buy and sell those things or gamble on them, if anything, somehow.
Hmm.
Um, all right, I want to double back to the Osmo token. I didn't follow every development with Osmo 2.0. My knee jerk reaction was it didn't go far enough. I thought that the Osmo token was in trouble, especially let's say a year ago into quarter two. I was like, holy shit. Like, if Osmo keeps going down, number one, it's going to hurt all the low liquidity tokens that are not listed on centralized exchanges paired against Osmo. Number two, you have a governance problem because someone who doesn't even care about the ecosystem can come in and buy up these important governance tokens pretty cheap.
Hmm.
Osmo 2.0 comes along, didn't take long for the token to reverse. it's performed pretty well, right? What is it, like 5x to 7x from the bottom, I guess. Without going into too much detail, can you rattle off major differences with Osmo 2.0 on the token? Um, if it does in fact give much better value accrual based on platform use, just quick
Mhm.
quick summary. We don't have to go into any one thing too much.
Osmo 2.0 was a set of tokenomics changes, mostly on the supply side, right? There was separate things that happened on the demand side,
Okay,
not demand, but like the value accrual side. So maybe I'll talk about the value accrual first, right? A number of protocol revenue systems went active around the same time, right? So first one that went live was ProtoRev, which is basically a in protocol arbor. So normally, like when people route through pools, there'll be an arb bot that comes in and like back runs them and like, you know, get some profit. And we realized that hey, this could actually just be done by the protocol itself. And
right.
so that's the first one that was built.
And that's
Um,
skip protocol.
Skip helped build this one.
And from what I understand, this is very significant when
Mhm.
the volume is high, right?
Yep. The second one was taker fees. So taker fees basically is or take trading fees, right? Like this is honestly this is the bread and butter of every exchange, right? Like taking exchange fees. So that's that went up. And there's 10 bips on every trade now at this point. So yeah, that's the biggest source of revenue. And then another one will be going live soon, which is the MEV auctions. So MEV auctions is basically at the beginning of, we sell off the right for the first transaction in a block, and that's valuable because usually people want to use that to if there's liquidations to be done or arbitrages against centralized exchanges. There's value in being that first transaction first to act, and so yeah, people will pay for that, and that'll be another source of revenue. So we
Interesting.
have revenue going on, but then
And
the
these are
other
things that the end user is not really going to notice these things.
You'll note they'll notice it in the increased staking APR. So, Osmosis actually just on our site we launched a staking page, a native staking page now because we like obviously we like there's a lot of staking pages out there, right? You have Keplers and Leaps and all these sorts of things, and we just like had a slightly different take on how we wanted the UX of staking to work. We didn't want you to have to select validators every single time. We came up with this concept of stake squads, where you say, "Hey, this is my stake squad, and what I want to do is just every time I stake, I just want to keep delegating to the same stake squad again and again, and you can add and remove people from your stake squad." So we just had this like sort of different UX around how it works. So that's why we built this native staking page. But you'll notice people starting Twitter started noticing like, hey, why is this saying like 16% APR while Kepler's says 9% APR? Like, why is it? Why is there such a big difference? And it's because our native one is actually accounting for all of these other protocol revenue sources. So the
Oh,
Kepler
okay.
one is only doing inflationary APR, while that other 7% that our site is showing is coming from this like actual protocol revenues.
That makes sense. That makes sense. There will be times where the protocol revenue is going to outpace the
Mhm.
inflationary rewards. I don't know how
Yeah.
close you've come now. I don't consider this like a full on bull market, but I know looking at Skip Protocol's numbers, the way it was shown to me during these high volume times, the MEV capture on Osmosis is going to be enormous.
Yeah.
It might be in very
Mhm.
small windows of time, but if you're staking long term, you don't care when that is. You just know that that capture is going to go to
Mhm.
stakers, and it's more, I guess, more beneficial to stake now because it's not only inflationary rewards. You're capturing value from the actual use of the DEX. Is that a
Yeah.
simple way to put it? Okay.
Yeah.
I want to change paces now, really quick. I got a good tweet from you. Let's see if we can get this to display and display both of our faces at the same time. Oh, there we go.
Mhm.
So here's the tweet. There are certain people in Cosmos that I think at times come off as like Bitcoin maxis deep down, right?
Mhm.
I don't know if you would fit in that category, but maybe I do see like these super pro Bitcoin tweets every once in a while in Cosmos. I don't think I see that in most other ecosystems, especially not like where I came from, which is Cardano, right? They don't acknowledge other tokens. Osmosis will be the biggest DEX for Bitcoin by end of 2024. How's that happening?
Mhm.
Is that going to
Yeah.
be part of this like ideal, like, let's get to Robinhood status in Web3? To do that, Bitcoin has to be involved. It's
Yeah.
the number one token. So explain this a little bit.
Yeah. So I mean, I definitely agree that Cosmos definitely has a lot of closeted Bitcoin maxis, of
I
which
think
I
so
am
too.
I
Yeah,
am definitely one. I think
I'm in there too.
what's interesting is if you look at the Cosmos ICO, that like the Atom ICO, like from 2017, uh, it was actually one of the few ICOs that was raised in. Most ICOs were raised in ETH, right? The Cosmos one
Mhm.
was actually raised in both ETH and Bitcoin, and I think
Yes.
almost like a little bit over a third of the contributions came in the form of Bitcoin. So I think that kind of caused there to be a larger Bitcoin contingent within the community. And even I got into Cosmos because I saw it as the way of building the app layer for Bitcoin. So, that's always been my end goal. Um, so that being said, how do we do this, right? So actually, first of all, yeah, how do we do this? There's already been a big lot of usage of Bitcoin within the Cosmos community, right? Thorchain actually is currently the biggest Bitcoin DEX by volume for native Bitcoin.
Right.
Um,
Right. Right.
if you look at, you know, Babylon is this like project that's building restaking for Bitcoin. Um, Even Terra, if you remember, like Terra like was building up Bitcoin reserves, like as to back the stablecoin. It was a bit too little, too late, but like that was the direction they were going. And so I think Cosmos has one of the biggest ecosystems outside of like EVM world, but we don't have that same like base money in the same way as ETH, right? And I think the way for Cosmos to get to the TVL levels of something like the Ethereum ecosystem is to like bring in Bitcoin. I think that's the only way you can build something that can provide as big of a ecosystem as Ethereum.
Do
And
you know
so
of other ecosystems that are focused on Bitcoin like this, or do you think Cosmos has a chance
um
to be
I
like the first big one?
I think it's so obviously there's like the native one like stacks for example, but I think
Yes.
it's a little bit too small, right? There's just not enough network effects there. It's not getting that like sort of adoption. Um Avalanche has done a good job, has actually brought over quite a bit of Bitcoin. So if you look at their like they have this they're built their own bridge it's called BTCB. And if you look on like Trader Joe, it's actually like a lot of the top pools are for BTCB. So Avalanche has actually done a pretty good job at bringing over Bitcoin, but it's still not their like focus, right? I think that Cosmos has that potential to be like this is like this is our focus is to be like the Bitcoin app layer. Um,
Got it.
so how do we plan on making this happen? Like honestly, we're kind of uh standing on the shoulders of like Thorchain quite a bit here because Thorchain has built one of has so well, okay, two steps, right? One is uh we're working on sort of okay, three-pronged approach. Number one is native WBTC. So we worked closely. So in Ethereum, WBTC, which is like the BitGo wrapped Bitcoin, is like the biggest, is the main representation of Bitcoin on Ethereum. And if you look on Ethereum on Uniswap and stuff, WBTC is actually still like one of the always top five pairs, basically. So there is quite a bit of Bitcoin trading happening on Ethereum. It's just in the form of WBTC wrapped by BitGo. And so what we saw was like, okay, there's demand for Bitcoin, but like, and people seem comfortable with WBTC, but now now you have this like additional bridge risk that you have by having to use
Yeah.
Axelar or something to bridge over WBTC. In the same way that people had a preference for like Cosmos native USDC instead of bridged USDC, we saw like, okay, there's going to be a demand for native WBTC instead of bridged WBTC. So that's why we worked with BitGo. We actually saw the initial issuance of WBTC. It's only been $10 so far, but expect to see a lot more start to be minted in the coming week or so. So that's number one. Second is Nomic. So the biggest problem with WBTC, while two problems. One is, yes, it is still trusted in a centralized custodian, which is BitGo. But two, there's not a way for a normal user to go back and forth between Bitcoin and WBTC.
That's
So
true. Yeah.
yes, it's so you have to be like what you call a merchant, which is like you have to like do this like long KYC process with BitGo that allows you to like mint and burn WBTC. So the Osmosis Foundation went through this process. We have a couple other market makers who are going to be ready to mint WBTC on Osmosis. But this is where Nomic comes in. Nomic is a bridge that allows you to, one, it's decentralized, right? It actually has a validator set. And two, anyone can just send Bitcoin on the native Bitcoin chain and it will mint. Uh, it'll like bridge the as NBTC on Osmosis. So this is like truly decentralized bridging. Anyone can use it. You want to send Bitcoin from Coinbase or Binance straight to Osmosis, you can do that
Ooh,
via Nomic.
okay.
So
And
that's
so, and by decentralized, you mean rather than just like a multi-sig with possibly the same person, right?
yeah,
Being all the addresses, the validator set takes the place of the multi-sig. So it's just
yes,
the chances of it being compromised are way less. There's more parties there, and presumably they don't all know each other. Like with a
correct.
multi-sig, they're all going to know each other. Possibly live in
Hmm.
the same apartment building. Who knows? So, all right, that sounds good. I wasn't even sure how Nomic was going to fit into it. What about native BTC? Can we
Yeah, and
bring
so the
this?
third one is using Bifrost. So Bifrost is a bridge solution that was built by the Thorchain team, and that's how they actually do their swaps. But due to ideological design reasons, Thorchain doesn't want their bridge technology to be used as a bridge. They only wanted to support swaps, right, on Thorchain, which is fine. I understand where they're coming from, but they've built this amazing tech, and I feel it can be repurposed into a generalized bridge. And what's nice about so I actually think that there's a big trade-off. There's a trade-off between the Nomic and the uh, Bifrost design. Bifrost is once again the Thorchain model. Nomic, in my opinion, is more secure. It has a little. It has some better tech built on it. I think it's better tech basically. It has more functional features that I really like, but it's very Bitcoin specific. It
Right.
makes use of a lot of the recent updates to Bitcoin that have happened over the last 4 or 5 years. You make use of some of the new opcodes and SegWit and stuff like Taproot. Um, Bifrost is so generalized that we can point it not just at Bitcoin, but we can point it at Dogecoin and Litecoin and anything that like it's not Bitcoin specific, even though it does work for Bitcoin. And so that's why we want to have this dual bet where we're working with Nomic, but also having a more generalized Bitcoin bridge, because it also having competition is also helpful because it makes sure fees competition leads to like lowering of fees for the end users.
Yeah, I was going to say you give people the choice.
Hmm.
You know, fees are going to play a big part, and also people that are knowledgeable will be able to discern between what's more secure, what's maybe not quite there yet with security. But either way,
Yeah.
to be able to bring Bitcoin to any DEX is
Hmm.
going to be huge. I know that I talked to Shane from Stargaze. He was optimistic that Stargaze would be able to bring in ordinal inscriptions via Nomic as well.
Hmm.
Somehow, I don't know the mechanics of it, but using Nomic to bring in inscriptions. I mean, inscriptions are outperforming Ethereum NFTs, in different windows of time. Doge has inscriptions as well. So there's that. Now, Cosmos can become kind of like this all-purpose ecosystem, kind of like how Thorchain is like this decentralized swapping chain. Cosmos could be in the middle of all the different ecosystems, even if they don't enable IBC. It sounds like you have first mover advantage there as the I want to say first DEX. You're like the first app that people could actually use quite easily in the whole ecosystem.
Yeah. Sorry, what was the question again exactly?
No question. I was just
Okay.
riffing there. It's all right. It's a surprise. It's the first time it's happened, but
Yeah.
I do have a question about like the osmosis. Obviously, if you could get involved in Bitcoin, especially native Bitcoin, that's going to be huge. But
Yeah.
most of your business is not going to be Bitcoin, at least in the beginning.
Correct.
For a user, you go in there. I want an LP. I've used other dexes before. Wait a minute. I see all these different pools. I got
Yeah.
supercharged pools. I got these other pools. It seems like the supercharged pools, which is concentrated liquidity, they're more capital efficient. Would you say that's like the preferred type of pool for the DEX in terms of monetization?
Yes, because it's just what naturally is gonna happen. Well, it's preferred from the DEX from the perspective that like right now the DEX does put liquidity incentives. The amount of liquidity incentives the DEX has been putting has been going down, and it will continue to go down as like volumes are increasing, and a lot of the fees just value just comes from like revenue, like actual trading fees for LPs. So, but you know the DEX wants to be efficient with its like incentive spend, right? So instead of spending so much on like it, it can provide the more people concentrate their liquidity, they get higher APRs, which is good because the DEX can spend less in incentives to still give the same
Right.
trading experience for the
Same
trader.
result. Yeah, and
Yeah.
I think one of the things that hurt the Osmo token, I wouldn't say it hurt the token, but
Mhm.
Osmosis launched at like the perfect time, like market
Mhm.
conditions wise. Airdrop got people excited, definitely pulled in people from other ecosystems. I was luckily staking Atom. I didn't know anything about Kepler. I just happened to be staking Atom in an Exodus wallet because they offered support for that. I see the Osmo airdrop. I didn't even know about airdrops. Now I'm basically 90% in Cosmos because of that. But but then there was like the tendency to over incentivize pools involving tokens that just like were not doing it. They were just there to be there. There was no reason to even have a lot of these tokens, right? The validator sets and the people voting. Yes, triple digit for this pool, triple digit for this pool. Um,
Mhm.
can that be avoided going forward by putting some guardrails on the amount of incentives, which pools get the incentives? Can concentrated liquidity completely replace, in some cases, these inflationary rewards that could hurt the token price? You know, you got this
Mhm.
mercenary capital
Mhm.
moving in. How do you see that shaking out now that we're in Osmo 2.0?
Yeah. So, um, you know, I know there's a lot of critiques about the Osmo inflation that was spent.
Well, a lot of the
I know.
critiques are in
Yeah.
hindsight, right? Like I could sit
Yeah.
here and say 2 years ago, you should not have
Yeah.
incentivized Kerberos. The validators are stupid. Why
Yeah.
did you do that? But it's all in hindsight, right? So
Yeah.
during the time, it's like market's great. Atom is
Yeah.
$40. Look at these airdrops. So, but yeah,
Yeah.
now that you knowing what you know now, there's going to be another market cycle.
Yeah.
Can we
I
set it up to kind
I
of
think
soften the blow?
this time around, Osmosis, like, I put up this proposal that like n- we pull all incentives from like non-major pools, basically, right? Like no more small and mid caps being
I would have loved that.
incentivized.
Like
Yeah.
9 months ago, that was like my biggest criticism of Osmo 2.0.
Yeah.
I said, this doesn't go far enough
Mhm.
because some of these pools probably
Mhm.
shouldn't even exist other than frontier permissionless, but they're getting incentives. Let the underlying tokens incentivize those pools externally. That doesn't make
Yeah.
any sense to have whatever. I don't want to name the tokens, but I name them on,
Yeah.
some of the tokens don't have a corresponding app,
Yeah.
but they're getting Osmo rewards. Anyway, keep going. Sorry.
Yeah, so basically now incentives have been limited to basically just a handful of tokens, which is basically state like USDC and Tether, Atom, Osmo, um, WBTC and ETH, like Bitcoin and ETH,
Right,
basically.
right. Yeah,
So
that
that's
makes sense.
and
Okay.
then LSDs is the other one. So we still do like
Staked at him.
some LS, yeah. And then I guess now Tia has been has been bumped up from the it's joined the club of major cap assets, and
That's
that's
the one that I have
awesome.
open right now. Yeah,
Yeah,
so it's interesting. So it's pool. I'm looking at pool 1247 is TIA USDC. I could see that
Mhm,
the let me just let me bring this up. People can see what I'm talking about because this is a good way to highlight the effect of supercharged liquidity and external incentives. So it's the third one down. And if I pass my mouse over here, I can see that the swap fees are basically triple what the Osmo boost is, right?
mhm,
So this is the direction you want to be going, it seems, so that you could allocate that Osmo inflation elsewhere, right? If you could
exactly.
somehow get
Mhm,
high amount of liquidity without pummeling the token price, that's ideal. 2
mhm,
years ago, obviously, I don't think that was possible, right? That was like really the beginning of Uniswap version 3. So they were like the only ones probably doing that. And here's another one where I have swap fees accounting for a nice 22% boost for I shouldn't say boost, 22% revenue for the LPers, get a little bit of an Osmo boost, 1%. Okay.
mhm.
It's not much, but then what's the super fluid? That's what we were talking about before. So this underlying token can then be used in super fluid staking. So it's being staked, right?
Mhm.
And that 4.9% is paid in Osmo or TIA or both.
That 4.9% is paid in Osmo right now.
Okay. And if TIA wanted to, could they also externally incentivize this pool further?
Yep, you
They
can
could.
yeah, yes. So you could see, let's see, can go down, finding an example of one. Uh, nope, that one is not.
Well, can I sort? I could sort here, right?
Yeah. Oh, you can go down to oh yeah,
This
you can actually sort. You can go to incentive types. You can click uncheck everything except for external incentives, basically.
yeah. So here's Pika, right? This is Picasso. Obviously, if they're not even technically part of Cosmos, they want to externally incentivize their token, and you're getting no Osmo rewards here, but it's still 45% APR for people that want to pool.
Mhm,
Picasso's is a DEX substrate.
mhm.
It's Polkadot
No, no. So, Picasso is
or
it
composable?
yes, it's the project from Composable. So it's
Got it.
like it's
Okay.
a bridge between currently it's an IBC extender to Polkadot, but then they're working on IBC extensions to other ecosystems as well.
Got it. Anyway, I got really only one more community question.
Mhm.
Came from somebody in my Telegram. Don't know who it is, and then we could wrap it up. I think I've hit all the noob questions that I could hit for this round. And if we
Mhm.
forget anything, of course, you could add it in. All right. So community question. I'm going to read it word for word, but this is something you would definitely know about. So it's about relaying.
Mhm.
Right? Average user is not going to know too much about relaying. I didn't know much about it till very recently. So it says relaying is getting to be costly and it's going to get more expensive. With community pools and chains being asked to pay validators and relayers for this service.
Mhm.
Ask Sunny how he sees the resolution of this issue or the next evolution of relaying on Cosmos. Can't people self relay and pay the fees themselves?
Yeah. So I think self-relaying the end goal is self-relaying. I
Okay.
think the biggest challenge is let's say you're sending tokens from Osmosis to I don't know, Stargaze, right? Stargaze at the moment, you need stars in order to pay your fees. But if you're trying to send USDC, let's say, or let's say you don't even have an account yet, the way it's set up right now is you can't pay for your IBC pack. To send an IBC transaction, you have to make a transaction on the other chain. And the problem is to make that transaction, you need to have fees. And right now, you can't do that with if you don't already have an account there. And so you're
Got
kind of
it.
stuck in this like chicken and egg problem. So there's a bunch of different solutions sort of being developed right now. One is this uh like fee tip kind of thing where you can just like pay a tip that then a relayer can that you can pay a fee that then the relayer who submits your transaction will get that fee that you get. So that's one.
And based on the token you're tipping in, the relayers can choose whether or not to
Yeah.
accept. That
Yeah.
that makes sense. That
So
makes
that
sense.
at least solves the incentives problem of IBC. It still now needs a class of people called relayers to do the relaying, right?
Yep. What
You
would this
couldn't.
this would just be in the wallet eventually, where people are like, "Hey, you're doing an IBC transaction, you gotta relay it. There's
Yeah,
2 ways you could relay, which way do you wanna do it?" Something like that?
yeah. I think by
Do
default
do the
it'll.
validators want people self-relaying if they're gonna get these nice subsidies from the community pools that seem to be unevenly, it's kinda like a first come, first serve. Whoever puts up the prop is gonna get, this initial subsidy for relaying. It does seem like it could get out of hand before it gets better.
Yeah, so that is a challenge. The other thing that also is well, I mean, eventually that's where it has to go, right? I think these subsidies are there as a stopgap until we have the proper solution ready. I think once the proper solution is ready, it'll uh, you know, everything will shift toward. I think the question of will we still have relayers and have this incentive fix, or will it actually switch to true self relaying? I think that's the question. I think eventually we'll shift to true self relaying, and we have some ideas of how to do that, but I think that might be a bit farther away. I think the incentive compatible relaying we'll see that much
Got it.
sooner.
All right. Well, Sonny, this was great. I really appreciate, being able to connect, talk about
Mhm.
osmosis firsthand with the co-founder. And you are like the community facing figurehead of osmosis. The people are gonna really like this, gonna like this chat. And yeah, I mean,
Thank you.
hopefully we could do it again in a couple months as we see more developments, more apps on osmosis, and of course more just more improvements as we get to be not only the number one Bitcoin DEX, but the
Mhm.
Robinhood of Web3.
Yeah. Thank you.